since we're talking about companies and the West Coast here, let's talk about a company that's based out of the West Coast, Microsoft. Microsoft shares are on the move here this morning as we're tracking ticker symbol MSFT. As of right now, you're seeing that moving lower by about 3.8%. The tech giant's guidance raising concerns on its artificial intelligence investment. This comes despite beating estimates in its fiscal first quarter. To discuss, we've got Brent Bracelin, who's the Piper Sandler equity research analyst. Cloud software and analytics is what he covers there. Brent, great to have you here with us this morning. Just give us your read into Microsoft's earnings here. And I mean, there were a few key things that they were really touting here, and it was largely leaning on Azure and the growth that they were seeing there.
Yeah, listen, I mean, this was a very good quarter for Microsoft, particularly on the bookings front. Their actually commercial bookings growth actually accelerated from 19% last quarter in constant currency to 23%. That's a real good forward indicator. They're talking about demand outstripping supply. So why is the stock down? I think the stock's down because we're really looking at a 50 to 70 cent drag on EPS now that they're actually accounting for the treatment of that OpenAI investment. We didn't have that in our numbers before. We're now lowering estimates because we're accounting for OpenAI, and I think that's kind of the big change here. Yes, the Azure business is slowing, but that's largely because of limited supply and capacity at this point. That will change, and you'll see a re-acceleration in Azure in the second half of their fiscal year.
Brent, it's Julie here. What kind of visibility do we have into the ROI on that OpenAI investment, right? I think that's really the crux of the issue that a lot of investors are trying to get to here. Yes, we know that they're spending a lot. What are they getting out of it? And how does Microsoft's clarity, transparency on that issue compare to some of the other companies that are trying to invest a lot and get something out of AI?
Yeah, to put things into perspective, their Microsoft AI business will cross over $10 billion in revenue in 2.5 years. The cloud business took 10 years to build a Microsoft Cloud $10 billion business. So this is one of the fastest growing products in Microsoft's history. If you go back and think about Microsoft Cloud, we thought of that as a small business. That's well north of $100 billion today. Azure alone is about $65 billion run rate, growing over 30%. In a year and a half, we think Azure alone will be the next $100 billion business. As you start to think about Microsoft AI as a $10 billion business, we think it has legs to the next $100 billion business as well for Microsoft. So I think there's a lot of focus on that CapEx spend and getting a return on that CapEx. I think it's important to think about when Microsoft reports that CapEx number, we're actually at $82 billion. That sounds like a lot of money. It is a lot of money, but the reality is over half of that spend is actually in building and land. It's not in GPUs, not an overbuild on server capacity. They actually are saying they're under supply on server capacity and GPU capacity. So I think it's a timing mismatch when those building land investments will eventually be filled with capacity and eventually drive a lot of incremental revenue for Microsoft and eventually a lot of profit.
You bring up an interesting question too, Brent. You know, the company did talk about being data center constrained in the quarter, and you talk about them making land investments. Why are these companies doing it this way? In other words, why are they owning the land and the data centers themselves? You know, wouldn't it be more cost effective to lease it or to have some sort of agreements with REITs, et cetera?
Interesting enough, Microsoft does both. They will lease and they will own. Microsoft's in a unique position. They're generating about $120 billion a year in operating cash flow. And they have the means to be able to buy land themselves. It's actually a better payback for shareholders over time if they actually buy. They have the capital to do it. They can not only use that $120 billion a year in operating cash flow to fund $80 billion of CapEx and financial leases, but they also can, buy back shares. They can also fund dividends. And so they continue to have a very favorable capital allocation strategy. So I think it's fortunate to be a high margin model, generating lots of cash flow a year, and they're in in a luxury position to be able to do both, both invest and return shareholder to capitals.
Yeah, land now and data centers presumably in the future on that land. But as Satya had said on the call last night, data centers don't get built overnight. I mean, at the end of the day here, Brent, one of the other major things that they talked about on the call, and we've heard this shift, or at least this new term that the street is getting adjusted to and trying to figure out what the monetization strategy is going to look like. And it's around agents. I mean, we've heard that from Microsoft on the call last night. Salesforce is talking about agent force as well here. So it seems like agents are the new AI buzzword or AI term. What does that look like monetized for these companies if they are moving away from saying, hey, it's your co-pilot versus your agent?
These are all part of the spectrum of automation. And I think there's a misnomer around focusing too much on how AI is going to drive incremental revenue. It will. I think the real opportunity, if you look at the S&P 500 in aggregate, $16 trillion in revenue, in aggregate, $3 trillion in EBIT. That implies about $13 trillion cost savings opportunity. And that's really where agents are going to come into play, where AI and the return on AI is going to come from automating processes, lowering that $13 trillion of cost takeout opportunity in the S&P 500 alone. That has nothing to do with incremental revenue. That's cost savings. And so when we think about agents, that's really where the narrative shifts from how much revenue will Microsoft generate from AI to how much cost savings will Microsoft enable at the S&P 500.
Really interesting point there, Brent. Thank you so much. Great to catch up with you this morning.